Tesla stock finally bounced from the over 40% decline from all-time highs. You really haven't seen any bounces at least since February 20th. So Friday was great. You went up 3.91% in regular trading, up another 0.5% in after hours, and Tesla was really a clear outperformer across the board. Even other momentum stocks that have sold off recently, like Tesla, well outperformed momentum, big tech, literally like everyone. Here in this video, I will share with you what the short sellers did on Friday, what big money is doing with option activity, and big news today for Tesla stock investors. Now, option activity on Friday from big money was quite positive. You had 378 different trades totaling $416 million with a positive order value of 76%. It was not a bad day for option activity. And big money, they continued to cover on short positions. They covered 140,000 shares yesterday. And for anyone that does not know, this is one of the lowest readings of short interest we have ever had on Tesla stock. Technically, 2 weeks ago was the lowest at 2.13% short interest of free float. But you're still at 2.2%, which is, I mean, magnitudes lower than any other really point in history for Tesla. Just look back to, July, August, September, October of 2024, you were consistently between 3 and 4% short, like almost double the amount of shorts that we have today. And in obviously years prior, like 2023 and 2022, you were much higher than that, routinely in the 5 to 10% short interest range. And then, obviously 2020, you were like 10 to 20% short at all times. So from that perspective, this is the most bullish hedge funds and institutions have ever been on Tesla stock. And, well, it makes sense. Tesla's down $200 per share from all-time highs. It is a great opportunity as long as Tesla launches Robotaxi, which looks like they will, and they are successful with Optimus, which too soon to tell. But, I mean, if you're going to bet anyone's going to be successful in humanoid robots, it's going to be Tesla. Humanoid robots are going to be much the same as car companies like a Lucid or a Rivian. Do they have great products? Yes. Are they able to produce them at scale and do it profitably? No. And that's going to be the challenge with humanoid robots as well that will really set Tesla apart. Tesla will be probably the only company that is able to produce these robots at a cheap enough cost and produce enough of them to actually be profitable in doing so. Tesla is like the Tesla of humanoid robots, whereas other companies are like the Rivians and the Lucids, right? And all of the other EV companies that went bankrupt. It's going to be the same landscape. And long story short, the business has actually gotten much better, even though you've sold off 40%, a little bit over 40% from all-time highs. As I've explained here on this channel before, the scary headlines about 45% reduction in deliveries in Europe in January was only a 9,000 reduction, okay? In January 2024, Tesla delivered 18,000 vehicles in Europe. In January of 2025, Tesla delivered about 9,000 vehicles in Europe. And I'm rounding here, okay? You get the idea. It was a very relatively small difference, and it's because of the Model Y that's launching. Again, we see this in China, where China is selling the Model 3 really good. I mean, nothing has slowed down there. But the last 4 weeks, Tesla has virtually not sold any Model Ys in China. No wonder the numbers look bad. People are waiting for the new Model Y. And I think that's really the case everywhere. We can see in Australia, via news that I shared with you yesterday, the new Model Y is already sold out in that country. Now, granted, there was probably not a huge allocation set aside for Australia, but maybe they need to set aside some more because, as Elon said a couple weeks ago, the Model Y is selling like hotcakes, and it will sell like hotcakes basically everywhere. Tesla has officially started selling the regular Model Y in China with up to a 10-week delivery wait time. That's a lot. Dude, that's over 3 months. The demand in China is redonkulous, for lack of a better word. And just wait till people realize how successful the new Model Y is going to be, that Tesla does not have this demand problem. I mean, that's a lot of what is beating down the stock. And also look at this. Tesla last night announced that they have increased inventory discounts in the US for the old Model Y to as much as $7,000 off. Now, the biggest discount I could find was like $5,000 off. It was a slightly used like demo vehicle. It was going for $33,000 or so. So select areas, you can get them even cheaper than the $37,000 suggested price here. But this is the Model Y Performance for $37,000. That is insane. Now, why is this great news? Well, I think it really reaffirms to us the management team is phenomenal at Tesla, because it's kind of like a cruise line, okay? Cruise lines, they sell their rooms at expensive prices, blah, blah, blah. But the last like 1 to 3 days before a cruise sets sail, they will offer massive discounts. Why? Because that's where the margin is. So Tesla has already produced these old Model Ys. If they have to discount them a little bit to sell all of them, that is going to be very much positive for margins. Just like, again, think of like a cruise line that discounts rooms right before they sail just to fill them up. Same kind of concept here. And you have to discount these. You don't really have a choice, because you have the new Model Y, and clearly people are waiting for that to come out. But entice them with a lower price, and you're probably going to get some takers of this. The last thing you want is thousands of Model Ys that are unsold, that really, are struggling to be sold. That is very bad for margins. Now, if we look at Model Y inventory, currently there's about 6,000 Model Ys in global inventory. I would argue there's probably a couple thousand new Model Ys here as well. So anywhere from 1 to 3,000 old Model Ys could potentially need to be sold, which, that's not a crazy number, but again, it does show management team is phenomenal here. The Model 3 is sitting at about 4,100 in total global inventories, Model X at 1,800, Model S at 1,300, and the Cybertruck at about 950. And again, look at this. Tesla is offering free lifetime supercharging for people who buy a new Foundation Series Cybertruck from inventory. Orders must be placed on or after February 28th, 2025. This offer can be combined with the up to $6,000 inventory discount and the $1,000 referral discount. And it's the same thing that's happening here. Tesla this year is going to start producing the cheaper variants of the Cybertruck. I think what Tesla's really trying to do is to get those individuals that wanted to wait for a cheaper Cybertruck, to get them to purchase Foundation Series, right? Obviously, you discount it a little bit, free lifetime supercharging, entice people there, and that's what they're trying to do. Obviously, the Foundation Series Cybertruck is higher margins, so that would be a good move on Tesla's part. But again, I don't want you guys to fall into the trap of, oh my gosh, Tesla is offering these discounts again. This is 2022, blah, 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 all over again. No, it's strategic. They have new models coming, and they want to sell through the inventory that they have of the old models. That is a very prudent business strategy for an automaker. That's like for GM, they don't really do this as much. That's why they have like months and months of inventory on dealer lots. I mean, they don't operate this efficiently. Speaking of GM and Tesla, they have the most loyal owners, according to a new S&P Global Mobility study based on an analysis of over 13.1 million new retail vehicle registrations in the US during the 2024 calendar year. Tesla won with overall loyalty to make, ethnic market loyalty to make, and highest conquest percentage. Yeah, if I told you I knew exactly what that meant, I would be lying to you. Overall loyalty to manufacture was actually General Motors. I imagine Tesla was pretty damn close there. And you could see here the other companies that did win some of these awards. And Elon Musk essentially confirmed that Tesla will offer free robotaxi rides in California. We did get those permits that were announced yesterday. They actually were filed in December, so we're just now hearing about them. But Elon Musk shared this post with the headliner that says Elon Musk's Tesla moves to launch free self-driving taxi service in California. As Jaden here comments on this post, he says this is huge. Butts in seats sells cars, and that is a ploy on your psychology. Let me explain why. In fact, in the book that I am reading right now, The Diary of a CEO, it's a great read. It's a lot about the psychology of people and how businesses kind of, it's not like manipulative, but kind of in a sense. They use the psychology to better their business, right? So people, when they're given something or experience something, they don't want to give it back. That is why when you go into an iPhone store, you can try the iPhones. They have internet hooked up. They have apps already on the phones. When you're experiencing it, when you feel like you have possession of something, you do not want to give it back. That is why offering, demo rides is such a seller, because, it might look good. You might like the look of it, but once you're actually driving it, you want to keep it. Now, there was many experiments done on this, and in the book it actually highlights where if you take 3 and 4 year old kid, whatever, 5-year-old kid, and you get the boy a girl's toy and you get the girl a boy's toy, they don't want to change toys because they have already claimed possession and ownership of those toys. Even though they're not the right toys for those kids, they still love them because they're in possession of them. Okay, they got to try them and they want to keep them. Same kind of thing we do as adults. When we get something, we want to keep it, even if it's not technically ours yet. So I think that is obviously a ploy in getting people to buy a Tesla, to buy FSD. I think that's really what it's about. Selling more FSD. Because obviously, you're not going to have free robotaxi rides forever. And it is confirmed that Tesla's FSD v13.2.8 is operating in shadow mode in Europe. And it does look like Tesla's full self-driving is rolling out to more people in China. Like, operate in China. Look at this traffic. I mean, it's just insane. I mean, and especially how FSD was trained with just using videos from the internet. I mean, it's hard to even imagine that. Look at that. Bank of America says Powell still controls the short end, but Musk now controls the long end of the yield curve, which is fascinating because the long end of the yield curve is really derived from risk and inflation. Now, if I don't think anyone really thinks inflation is going to be an issue in the long term, that we're going to conquer inflation. It's going back to 2%. So the majority of what's affecting the yield curve on the long end is the risk profile of the government. See, risky assets pay you more in yield. Okay, so a yield on anything minus a severe crash can tell you the risk of that asset. If you have a 10% yielding dividend stock, well, the risk on that is magnitudes larger than something like Apple that pays you half of 1% or quarter of 1%. Okay. Well, as the government has spent more, they've gotten riskier. The odds of default have definitely went up in the government over time, and that's why yields long term have went up to compensate for that extra risk. As Elon Musk is doing, cutting government spending, and the administration wants smaller government and lower deficits, as the market starts to believe that, it's going to drive down 10-year treasury yields. Now, the big concern that I have at this point is the economy, because the data that we've gotten recently, whether it's retail sales that came in at negative 0.9% month over month, whether it's, and that was the worst number since August of 2024, or personal spending that came out Friday, negative 0.2%, which was the worst number we've seen since March of 2023. You almost never go negative on that metric. And it's happening. The spike in initial jobless claims. Last month, we had a weak jobs report. We get a new jobs report this upcoming Friday. It definitely feels like the economy is weakening. And I do think that is a big risk factor for markets that we need to be paying very close attention to, because, if it looks like we're heading into some kind of recession, this is not over. Markets are going to fall further. I mean, you fell from high to low about 5% on the S&P. You're down about 3% from all-time highs right now, given the bounce that we've seen on Friday. But if we continue to get bad data and the Fed's not able to cut rates because of policy uncertainty, that creates a potentially really bad dynamic for markets. Now, I don't want anyone to be really confused with this. I think Tesla is a great buy right now. It has fallen way too much. I mean, way too much. So no matter what happens in markets, I think Tesla's a great buy here. I have been buying Tesla stock. I mean, you're still down 40% from all-time highs after this bounce. You were down 44% from all-time highs. Like, Tesla's RSI is even still oversold given the bounce we had on Friday, which is kind of incredible. You pretty much bounced at this 200-day moving average as well, which is a great sign. So short term, there's great signs for Tesla. And I wouldn't even be surprised if Tesla could get back into the 300s, like 310, 325 or so with this bounce. I'm just a little concerned that this may not be the end of the fall for markets. But how low does Tesla really go at this point? I mean, 250? Maybe, that's possible. But I think the sell-off in Tesla could really start to slow down as maybe the broader market sell-off accelerates. Again, just because of how much Tesla is already down, which is, unprecedented compared to other stocks. Again, just look at the personal spending data that we got on Friday. You almost never go negative. You went negative March 2023 by negative 0.1% on a month-over-month basis. The last time before that you were actually negative was February of 2021. You were negative 0.6%. And then you had a massive rebound in March. Okay, so you almost never go negative here because people spending money is like 70, almost 75% of GDP. Like, people slowing down spending money is the single fastest way to go into some kind of recession. Now, by no means am I calling for a recession at this point, but the Atlanta Fed GDP Now tracker is tracking negative 1.5% GDP. And the main headline on CNBC over this weekend, let me just pull this up from the X account, was this: the first quarter is on track for negative GDP, Atlanta Fed indicator says. And this number will obviously probably move up again. We're probably not going to actually have negative 1.5% GDP, but it could be negative for Q1, which at this point, are we priced for that? Probably not. In fact, the personal spending report says personal consumption expenditures, PCE in the United States, fell by 0.2% month on month in January 2025. following an upwardly revised 0.8% increase in December and missing market expectations of a 0.1% gain, likely impacted by severe weather. This marked the first decline in consumer spending since March of 2023, primarily driven by a drop in spending on goods, negative 1.2% versus positive 1.2% in December. Spending on durable goods plummeted by 3% versus 1.3% in December, mostly due to a sharp drop in car purchases, while spending on non-durable goods edged down by 0.2% versus 1.2% in December. Additionally, spending on services increased at a slower pace of 0.3% compared to 0.7% the previous month. So every subcomponent of personal spending, whether it's services or durable goods, or non-durable goods, I mean, it all is coming down at a pretty rapid pace. So again, you don't want to run for the hills here. This is not the time to sell everything, but you want to get out a margin, you want to raise some cash, you want to be selectively buying. Like Tesla's a good buy here, in my opinion. Apple, not so much. Okay, you want to be selective in your buying, because I don't think this is the end of volatility, and I do think markets could fall further from here. Just think about it like this: Wall Street's currently saying we are, in a growth scare, and that's fair. It's not going to take long before Wall Street says, "Oh wait, what about a recession? Like, could we actually go into a recession here?" As people start to bring up recession, yeah, markets are going to fall further. So obviously, the data can change, but at this point, it does not look good. Even Elon Musk said yesterday when the GDP report came out that basically government spending has just propped up GDP numbers. And essentially, as we cut government spending, GDP numbers are going to fall. That's just what Elon said. And that's not going to translate into being positive for stocks anytime soon, if that is what happens. So no, you do not want to sell your long-term portfolio. But do you want to raise cash? Do you want to get out a margin? Do you want to buy some calls on TLT potentially? Maybe. I think that's, a strategy worth considering. Even TLT, like on Friday, look at this. I mean, the bond market is concerned. TLT was up 1.23%. Look at the rally into the end of the day. It was not just the stock market that went higher. It was TLT. I mean, look at that. TLT is starting to break out again, which, great. Lower yields is awesome. But the reason the bond market is breaking out is because of the weaker economic activity. It's not inflation. Inflation reports have come in line with expectations. That potentially is a troubling sign. But we will have more to talk about all of this in the next video. Ladies and gentlemen, that is going to do it for this video. Let me know your thoughts on this down below in the comments section. Have a fantastic rest of your day. If you guys would like to join the trading community as well, support the channel, and get access to all of my trades in real time, we have a newswire over there. Keep you guys informed. Come ask questions. Come get involved. Link down below for that in the description of this video. That's it. Have a great rest of your day, and I will see you in the next one.